Hello guys, this is Jorge with Redstone Investment Group, where you invest and we do the rest. Why am I doing a video? Because I was bored. I'm driving. This traffic is so heavy. So I figured it'll allow me to provide people some valuable information. I love educating. And I figured I like doing videos. I have fun with it. So today I wanted to talk about Tampa Bay and the real estate market moving forward. Different people have different opinions of what's going to happen to Tampa. People think that there's going to be an eventual collapse of the market, that Tampa or United States as a nation is going to start seeing prices go down in real estate. But I'm going to tell you why I do not feel that prices are going to go down in Tampa or in Florida anytime soon, okay? What is different between now and the last collapse? What can we learn about the last collapse of the market, okay? Toxic loans, okay? One of the main reasons why the market went down in 2008 were due to toxic loans. Loans that were variable rates with due dates of 3 years, okay? Arm loans, okay? So you have people that were getting loans that they couldn't get approved for, that they didn't have the income for. But on top of that, they were very short terms that were due within 2 to 3 years, which is a big no-no, okay? Toxic loans, people were left and right getting approved without having the capability of maintaining those loans, bottom line. And then when it was time to refinance, they were left with the hot potato, because most people thought appreciation was going to continue forever. And when it was time to refinance on a cooler market, they were shocked to know that they didn't have the value they were thinking. To top it off, some of those loans were negative ARM, meaning that there was negative amortization. So in other words, more money was owed at the end of the term. So imagine the perfect storm. You have properties going down, or prices, stabilizing, but mortgages, the money owed into the mortgage going up. That's what I call toxic loans. Negative amortization, due dates that were, on the loans of 2 to 3 years, interest-only payments, people getting approved without the proper documentation, the proper income, actually, not having enough income. So that's one of the main reasons why what happened in 2008, the toxic loans. And then on top of that, you add that the fact that you had a lot of people that didn't know what they were doing. People that the type of education that there is online now. You have companies like, I give a lot of credit to Bigger Pockets, but there's so much more information right now on how to make the right decision when it comes to buying your primary home or buying your investment home. So I believe the person of this era, this new generation of buyers, is more educated than some of the people that bought in 2008. Number one. Number two, and to me one of the most important reasons why I don't believe we will have such a catastrophic collapse in the market anytime soon, is because we are living in a gig economy, meaning that If you get in trouble or you need to pass through 1 month because you don't have enough income coming, you could always rent your car. You could always do Airbnb. You could rent your lawnmower. You could rent your exercising equipment. You can rent everything. So the power has been given back to the individual when it comes to being able to make money and being able to, do things. And this is what I call the gig economy. We are in a gig economy. Okay? So to me, that's the number 2 reason why people are in better shape to maneuver through the changes, rapid changes on a downturn economy. And third is the fact that prices are now a little bit above where they were in 2008. Incomes, the income in general has gone up. So people are more prepared to make the payments. Everybody that has gotten a loan has been 100% verified most of the time. There's no stated asset loans anymore. So that's why I find it very hard to see any type of major collapse, because 2008 is too recent to us, and we still kind of like we still kind of like remember. We still remember what happened in 2008. It's not something that happened in the long distant past. It's something that happened recently. So that's why I believe people are more prepared this time around. But last and not least, let's talk about Tampa. Tampa in general. Tampa is the city of champions. So much going on. Tampa has been an underdog for many, many years. Tampa is well diversified when it comes to jobs. It's the capital of call centers. A lot of main companies, Fortune 500 companies, have their call center here. I remember a ton of my friends from high school, from day one, were able to get jobs at $20 an hour. So when it comes to jobs, we're very well diversified. We have theme parks just like Orlando. We have beaches just like Miami, but for a fraction of the price that you will buy something somewhere else. Where Tampa has the biggest development right now in the United States. Bill Gates, Jeff Bennett investing millions, billions of dollars in the Tampa Bay area. We're gonna be the first wellness certified city in the United States. Just Tampa in general, the Tampa Bay in general is very powerful right now, everything going on, where I sincerely do not see prices going down anytime soon. And last but not least is the migration of people. We have people coming from, because of COVID, coming from the north. We have people coming from the south, from Puerto Rico as well, the islands, with everything that has happened in Puerto Rico. There's a lot of people moving from Puerto Rico, the islands, to Florida. So ton of migration, good jobs, well diversified jobs, a gig economy, an area that's booming. Tampa is the place to invest, I believe, at 100%. Florida in general is going to be very hot for the next few years, and this is why I do not see any collapse in the local market for sure, and in the market in general. If anything, we'll see some sort of correction, but it's not going to be as big as 2008. So invest away, buy as much properties as you can. The only thing that is not infinite is land. So long-term real estate, no matter what, has always gone up. and take the opportunity. Buy your second property today. Don't wait until it's too late. Buy, do your stress test on your property. Make sure that you can still rent it if something happens. But don't shy away from investing. You're gonna regret it. You're gonna be the one saying, man, I wish I would have been bought in Tampa 10 years ago. For real estate, the time is always right. And time will heal the mistakes that you make. Whether you bought too high, whether you rent too low, whether you got the wrong mortgage, time will heal all of those problems. Long term, your property is gonna appreciate. You're gonna get a tax write-off. You're gonna be able to be your own bank. You're able to cash out anytime you want. There's properties that I've owned where I've cashed out twice already in the past 10 years. Guess what? No tax liability because there's no 1099. Cash that I put in my pocket, Uncle Sam doesn't need to know. Remortgage my property and fill up the bank again. 5 years, 10 years from now, I do another cash out and put money again. So invest in real estate, be smart, buy before prices go up even more, and build a portfolio. Anybody can do it. If I did it, anybody can do it. Thank you guys, and I appreciate your time.